Welcome, my name is Vishal Texanani. Today I'm speaking to Alan Kohler, the Editor-in-Chief at InvestSmart, one of our content partners. Alan is going to share with me his views about the upcoming February 2019 reporting season, some of the companies that he's eyeing closely, and we're also going to touch on Labour's proposed changes to Franken credits and whether that could mean an income opportunity for income-oriented investors. Alan, it's so great to be here with you. Congratulations on your recent entry into the Order of Australia membership. Well done.
Thank you, Vishal, and it's good to be here too.
So Alan, why don't we kick off with a bird's eye view of reporting season. In which parts of the market do you think earnings and dividends are going to grow?
Well, I think a lot of the old sector distinctions in the Australian market are becoming less relevant than they were, and I think the main distinction, the main sort of sector, if you like, that we should look at now is whether companies are domestic or globally focused. And I think the companies that are doing the best at the moment are those that are globally focused because they have access to a much larger market. And also, although global economy is a little soft, the Australian economy is much weaker, I think. So therefore, I think that's where we're going to find problems. Banks, retailers, companies that are focused on the Australian market are going to have difficulty, I think, this reporting season, whereas those that are looking overseas will do better. Okay,
and so speaking of overseas, since this time last year, the Australian dollar has fallen about 10% against its US counterpart. So specifically, are you able to talk about some companies that will benefit, so presumably the CSLs of the world?
Yes, well, obviously we have a lot of companies now that are globally focused, have their revenue from overseas. And it's not just the mining companies, although they're a part of it, BHP, Rio, all those companies, they earn US dollars. Translating them into Australian dollars, that turns out to be obviously a good thing. So that's another reason why globally focused companies are doing better. And as you say, CSL, ResMed, Cochlear, the big three healthcare companies, and companies like Amcor, CSR, Boral, all these companies, they are also going to benefit from a low Australian dollar.
Okay, so that'll reflect positively in their earnings, although ResMed did a report earlier this week.
Yeah, and that didn't go too well, really, that's for sure. So you need more than the Australian dollar going down to do well.
Okay. So investors should be wary about domestically focused companies, like you mentioned, challenges, falling property prices, general weakness in commodities prices, China growing at its slowest rate since 1990. The NAB business survey was out earlier this week, pointing to a deterioration in domestic business conditions. So those are you really want to be aware of Australian-only focused names.
I think so.
Okay. Let's talk about you and what you're doing in reporting season. So can you talk about two companies that perhaps you're watching from the perspective of a growth investor, and two income opportunities that you're looking at, and perhaps why you're looking at them and what you might do with them when they report their results?
Well,
sorry, loaded question.
Well, look, I don't regard myself as a stock picker. I'm not an analyst of stocks, so I'm a bit hesitant to pick stocks. But look, I would say that a lot of the traditional income-producing companies have got troubles. So the banks, for example, I mean, obviously none of them are going to go broke, but they're not going to be. They're going to have a difficult time. Credit growth is challenged. Property market going down. So I think it's now time to start looking elsewhere for income. And three income stocks that I like, that I think look terrific, are Spark Infrastructure, AusNet Services, and Alumina. Now, Spark and AusNet, they own electricity wires. They're distributors of electricity, and they're spending a lot of money, focusing a lot on renewable energy and connecting up wind farms and solar energy into the grid. And I think that they're going to be protected going forward. They are focused on the new world of renewables, and I think that they are not going to have difficulty as the market transitions towards renewables in the way that someone like AGL will, I think. Alumina is really just a mailbox for money coming from Alcoa Australia, and it's a good yield. I think it's like 9% yield, fully franked. It's fantastic. It's good, and it's a terrific company.
Okay, so these are some income opportunities, and what are you looking for in the earnings?
Just make sure that
the thesis
is still there, and that they meet their guidance, whatever that might be. I haven't seen any guidance from those companies, to be honest, but as long as they kind of show continuing revenue growth that'll support their dividends, that's what I'm looking for, obviously. I mean, in income stock, you're looking for what's the payout ratio? what is the cash flow, the free cash flow,
Yep.
sufficient to cover the dividend, and what's the yield? So that's really it's fairly simple with income stocks, to be honest.
Okay. Any growth stocks you're looking at?
Well, look, I'm a part of InvestSmart. They have a lot of analysts who produce a lot of recommendations. And if you go on the InvestSmart website, there's a bunch of buy recommendations. A couple of stocks that aren't on their list that I like,
Sure.
and that I have actually bought recently.
Yeah.
Pushpay Holdings.
Okay.
And a company called Bid Energy. Now, Bid Energy's already run a long way. It's gone from 10 cents to $1.10 last year. And it's continued to run this year from $1.10 to $1.35 now. It is a platform that examines companies, in particular companies, but I think they'll move to individuals later, electricity bills, and tells them how to improve their energy prices, get their energy costs down, and they set up an auction between electricity suppliers for that company's business.
Okay.
And they've got a global focus. As I say, I'm interested in global businesses. They are going global. The stock has taken off, and I think that it's just beginning. Pushpay has a platform for assisting churches to collect donations.
Yep.
And it's a New Zealand startup that has moved to Seattle in the US. The guy who runs it, Chris Heaslip, lives in Seattle now, and they're signing up churches hand over fist. I mean, there's $138 billion worth of donations being given to churches in the US, and they're starting to sign them up, and they seem to have a head start.
Okay, sure. Lastly, I just want to touch on Labor's proposed changes to franking credits. So the election needs to be held in May, and what I was wondering about there was whether you think that, in anticipation of that potential change, it is a potential change, that companies may perhaps take the opportunity in the February reporting season across the market, banks, what have you, to really increase those dividend payout ratios and flush out those franking credits.
Well, they certainly should.
Yeah.
If they have excess franking credits, they absolutely have a responsibility, an obligation to pay them out.
Okay.
That's for sure, because the whole thing will be grandfathered. Their individual shareholders need to get access to those that need cash refunds. So I think they have an obligation to do it, of course.
They have an obligation, but will they do it? Do you think it'll be an income bonanza?
Yes, I think.
I
don't mean a bonanza, but I think that companies that have excess franking credits are alive to this, and I think they will do it.
Okay. Is there a risk that perhaps they might push it to such a level where it has negative implications for or leaves their balance sheet in a weaker position because they're pushing the payout ratio so high?
I mean, what they shouldn't do is increase their payout ratio on a permanent basis.
Yeah.
If they have excess franking credits, there should be a special dividend.
Yeah.
And that's what BHP is doing, for example.
Okay. Alan, thank you so much for coming in and for sharing your views about the February 2019 reporting season. Really appreciate it.
It's a pleasure.
No worries. I hope you enjoyed this video. Now, please remember what we talked about today isn't investment advice. If you're thinking about transacting in any of the stocks and opportunities that Alan talked about, it's really important that you do your research, and please consider seeking financial advice. All the best with this upcoming reporting season. My name is Vishal Tekshanani, and I'll see you next time.